traders, Gary Wagner with WFGForex.com, your daily market update for Forex Gold. It is Sunday here in Honolulu, Hawaii. It is Monday in Australia, where Forex has just opened roughly a half an hour ago, currently trading 105.15. Very quiet range. It's down a little bit currently. It's had a low of about 102.80 and a high at 12.70. Traders, we had a very interesting week last week in that we received definitive confirmation that we are currently in a B wave of a corrective phase in gold. The real indicator was that the doji that we saw at the bottom of this A wave. This is that long corrective wave that we saw, and we had this large down day here, this black candle, this doji, and then a red candle, which, as I said, is a variation off of a Three River Morning Star. The reason I'm calling it a variation is you typically want to have a long candle, this red candle up, as well as a long candle, this black candle down. However, with a $25 range relative, this candle still did have a nice range, and that's why on the confirming candle, which is this candle here, we were actually able to initiate a buy signal and enter the market from the long side. We have seen this pattern before. If we take a look at the bottom of wave 4, and this is that corrective wave within this impulse phase, this 1 through 5 impulse phase, that signaled the last bottom that we hit. And again, we have this succession of black days, lower closing days, this small bodied candle, and then a red candle, and that signaled the actual Three River Morning Star, and the confirmation would have been where we actually initiated and did initiate a buy signal in the marketplace itself. Now, you have to be careful with the doji, because although you'll find it at tops and bottoms of the market, such as here, this doji cluster that we saw here, here's another doji here before it goes down. Of course, you've got a doji right in here. You also get them mid-range in a market that we've seen in gold, because what happens is the market will move up higher, as we see in this long impulse third wave, and you'll see you get kind of a breathing area, and then the market will continue higher. In the same way, we saw this doji right in here, as well as this doji right here, kind of signal a breathing area, or a area of contraction in range, in which it was, I like to label it, a resting period prior to this continued breakout to the upside. Now, traders, in terms of our current position, for those of you who are taking my call, we did get long gold roughly at 1179, 1180. That's right in this area. We initially placed our stops down at 1155. I wanted to place them below this pattern here itself. As the market went up, we did trail it on 2 occasions, and our stop is currently at 1190. That's 1190 on a protective stop. And as you can see, although it's a little bit of profit, the space between these two areas, if the market continues higher, we will be able to stay for that ride. If the market does retrace at some point, this will be a slightly profitable trade, but a profitable trade nonetheless. Now, I do expect to have resistance in this area, which is our 23% Fibonacci retracement area right here at 1212. And as I talked about, in terms of our upside target for our range in which I think this market can carry us to, typically on a B wave, this is being our A wave, what you simply do is, for the amplitude, we're going to take this amplitude and times it by about 50%. That puts us here to about 75%, which puts us right around 1234, 1235. And so that this is the range I believe that the market can go to if it follows classic Elliott wave, and if this B wave is going to be an impulse wave, and then we're going to witness another correction. I talked about last week that it doesn't have to happen that way. There are what's called, in terms of patterns, one that's called an irregular correction. On an irregular correction, what you get is some very interesting activity. On an irregular, you actually can get this B wave to go above the A wave. That's why it's called irregular. You can get variations, but right now we have seen gold following a pretty good wave pattern, and we've had excellent results in terms of forecasting amplitude, meaning the price that it's going to go based on Elliott wave. If we look back to wave 5, we predicted wave 5 would go about $100, and the reason we did that is typically in Elliott wave, wave 5 equals wave 1. And we also had extremely good results on wave 3. We came within $2 because that typically you take wave 1, which was a $100 move, times it by 1.61. In other words, you add $161 to the beginning of wave 3, and that put us at 1246. Lo and behold, the actual top, I believe, was 1248. So we actually hit that within a couple of dollars based on Elliott wave. Elliott wave has been a great tool in forecasting for us as long as we couple it with a Fibonacci. So we're looking for various levels where it's logical for the market to go. And then also kind of the final piece to the puzzle is going to be our candlesticks, because candlesticks is what gives us that indication by looking for bullish reversals here or bearish reversals up here. Lastly, as I mentioned, in terms of what I'm looking for in terms of activity this week, there's a couple of factors and a couple of technical areas that to me are critically important if we're going to see continued upside movement in the market. The first thing is this $1,200 area. It's a psychological target. As you can see, we don't have much technical history right in here, but psychologically, we do want to see on a closing basis this market trade above that. That's the first thing. The second thing that's going to be critical, I believe, is the resistance that we're going to find right in here at this 1212 area, because the one thing that you can see, and we've talked about this for the last couple of weeks, is on the occasions where the market did test above this area, which was this component within this A wave as it came down, as it moved back up. On 3 occasions it was able to, as I call a scouting party according to Steve Nissan, check the fortitude of the bears. The bears were able to then absolutely push the market lower to the bottom of this wave here. So that really what we're going to look at is, one, I want to see some closes in the area above 1200. It's critical. Secondly, we need to see how it's going to react at 1212, because 1212 is some superlative resistance in the market, and we do need to see, at least on a closing basis, if the market's able to A, trade above it, and then B, most importantly, close above it. If it cannot, I would look for this to be kind of the end of this B wave here, and I would look to go into our final corrective wave. That was going to be our C wave. Fundamentally, as you know, I'm extremely bullish on the market long term, but I also believe that this is a well-needed and a well-defined corrective phase that we're going through right now. So, as we begin to trade overseas, we're in Australia, we're going to go around the world to Asia, to London, and then in the morning to New York. We'll get an indication of what's going to happen in this area. The pace should pick up. Fundamental news should start coming out that's moving the market, and then we'll see what this week is going to bring. We've got a really strong trade going right now. I'd like to be able to take it, as I said, somewhere in this area up here. And then at that point, look to see if we're going to get that final corrective C wave down before we go back into our impulse phase, which is going to be a series of 5 waves, 1 through 5, taking us back to the upside. And my belief is that it will take us to new contract highs above 1265. I'm personally under the belief that it will try to test 1300 on this next impulse move, which is long term. It's another 4 to 5 months away. This has been Gary Wagner with WFGForex.com. As always, wishing you good trading, and we will talk to you tomorrow for the next daily report. Bye-bye.